Economy slowed more than thought in fourth quarter. The U.S. economy slowed more than initially thought in the fourth quarter, keeping growth in 2018 below the Trump administration's 3% annual target, and corporate profits failed to rise for the first time in more than 2 years. Gross domestic product increased at a 2.2% annualized rate, the Commerce Department said on Thursday in its third reading of fourth quarter GDP growth. That was down from, the economy grew at a 3.4% pace in the third quarter. The expansion the revisions to the fourth quarter GDP reading reflected markdowns to consumer and business spending, as well as government outlays and investment in home building. For all of 2018, the economy grew 2.9% as previously reported, despite the White House's fiscal stimulus of $1.5 trillion in tax cuts and more government spending. Growth last year, compared to the fourth quarter of 2017, the economy expanded 3.0%, revised down from the 3.1% reported last month. President Donald Trump likes to showcase the economy as one of the biggest achievements of his term, declaring last July that his administration had accomplished. Economists polled by Reuters had forecast GDP in the fourth quarter being revised down to a 2.4%. There are signs the slowdown in growth persisted early in the first quarter, with retail sales rising modestly and manufacturing production and home building tepid. That was underscored by weak profits in the fourth quarter. After tax corp, the economy is facing headwinds from the fading stimulus, slowing global growth, Washington's trade war with China, and uncertainty over Britain's departure from the European Union. These contributed to the Federal Reserve's decision last week to bring its 3-year campaign to tighten monetary policy to an abrupt end. The U.S. Central growth in consumer spending, which accounts for more than 2/3 of U.S. economic activity, increased at a 2.5% rate in the fourth quarter instead of the previously reported 2.8% pace. Consumer spending growth in business spending on equipment was revised down to a 6.6% pace from a 6.7% rate. Investment in residential construction was revised to show it contracting at 4.7% rate instead of at a 3.5% rate, marking the fourth straight quarterly decline. Government investment fell at a 0.4% rate, instead of growing at a 0.4% pace as previously reported. But exports were revised up to show them rising at a 1.8% pace instead of the 1.6% rate reported last month. Imports were revised. The trade deficit was previously estimated to have subtracted 0.22 percentage point from output. Inventory investment added 0.1 percentage point to GDP growth last quarter as estimated last in February.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.